We have Stefan in the chat box already. Good morning to you, sir. I hope you're doing well. Let's take a look at the markets as we usually do at this time of the day. And if you're totally new to these webinars, if you're just watching this now on YouTube, this is actually a daily webinar that we host here at investingcube.com and also on the ATFX YouTube channel. And what we're going to do in the next few minutes is, in essence, just to take a look at the markets and see if there's anything interesting happening. And we're going to begin with the euro, and then we're going to go through the pound and dollar yen. And then we're going to take a look at the crude oil, gold, DAX 30, and the S&P 500. Of course, if you have questions, you're most welcome to reach out to me. Okay, so let's begin a bit with the euro, and it's quite striking. The euro versus the dollar, not much has actually happened here since Friday last week. On August 16th, the market slid to this low, and August 16th was Friday. So since Friday, the market pretty much been trading sideways here in between a range of 46 pip. Now, yesterday we had the Fed rate meeting minutes, and so these are the minutes from the latest meeting. And they painted what people were calling a divided outlook for the Fed. Some people were pushing for 50 basis points rate cuts. Some other people were pushing for no rate cuts at all, and some, and then as we know, the majority pushed for a 25 basis points rate cut. As well, they're trying to tell us at the Federal Reserve that this is just one cut, maybe two cut thing. It's not the beginning of a series of cuts. Obviously, things have changed quite a lot since that meeting. We have the further trade wars with the introduction of 10% tariffs on some goods. The rest has been delayed until December. We also have inflation expectations that have been going down lower in the US. We also have the inverted yield curve, which is sort of coming into more in focus. So it all sort of looks like the market we're still going to have rate cuts, but maybe not as aggressively as before. To give you an idea, the CME Fed Watch tool was, let me see if it loads. Just about a week ago, the likelihood of having, so you need to look up here, so September 18th, right? So the likelihood of a rate cut just last week, the likelihood of having a rate cut was of 50 basis points was at 31.5%. Right now, the likelihood of having a 50 basis point rate cut is just 0%. So you can see how things have changed over the last few days, and yesterday, according to this one, was 1.5. But I'm sure it was slightly higher literally just 2 days ago, something like that. And now, in fact, I mean, compared from yesterday, the likelihood of having at least 25 basis point rate cut is at 98%, right? But this was at 0, so things have definitely changed, and it's less bearish now. And you're starting to see a little bit of dollar strength if you look at things like the New Zealand dollar. You can also see a bit of tiny strength against copper. Copper has been moving down a bit over the last day or so. Stock markets as well, we're going to look at that in a few minutes. They're not really too happy about the situation. As for the EURUSD, as I've been talking and mentioned to you guys over the last few days, I think that maybe up here around 112.14, it makes more sense to sell because we're bang in the middle of this downtrend. Now, I don't want to be a buyer here, even though price is stabilized. Rather, and the reason for that is because we're dealing with a downtrend, so I only want to sell if possible, and I sell down up here if I could. And I think stop loss orders are probably going to go up to 12.94. GBP versus the USD, so it's in and out from the sell zone. So we talked about selling here over the last few days. We got that little section correct, and this is moving down lower, but it's obviously being challenging now. There's some positive things happening. Don't want to read too much into it, but yesterday the Prime Minister of the UK, Mr. Boris Johnson, met with Angela Merkel, which is the Chancellor of Germany. And if I understand it correctly, Boris Johnson has about 30 days or so to show an alternative backstop. So there are signs here that at least Germany is looking to reconsider the backstop. However, let's be realistic. They spent about 2 years or so, if not on more on this, since 2016, really trying to work things out, and they still haven't found nothing. So not sure how they're gonna find something in 30 days that is not gonna sort of avoid a hard border. So let's see what happens, but I think that is driving a bit here. The GBPUSD, and it's trending slightly upwards. We can also see, as you know, trade wise, or sort of price action wise, that the market again is trying to create some head and shoulders. You get head, left, right shoulder, and the market might go up here, and then I think probably go lower here. As for if we take out 122, 112, sorry, 122.12, we'll probably trigger that inverse head and shoulders. Dollar yen then. So dollar yen is sort of moving away from the sell zone, pushing back into the sell zone, moving away. It doesn't really want to trade much higher, much lower. I think it's a bit difficult to say what's going to happen, but as long as you're below 107.10, there's no change to the outlook. As for crude oil prices, they're trading sideways, right? They go down and then they go all the way up, trying to challenge the highs, and then they're just being repelled lower. Here, again, we're dealing with a downtrend, and I think we can trade sideways for longer here. There's no reason to get excited about this at all. As for Brent crude oil, looks like this. Let's see if I can find another chart. So this is Brent crude oil, and this is your daily chart, and you can see yesterday had a very, very aggressive push to the upside, but you're dealing with a downtrend, and the original idea, if I remember correctly, was to have a stop loss at 268. So there's no change here to the outlook. I know it's been a few days going up, right? But there's no change to the outlook here at all. The price is being contained so far by this high, below this high, and we're dealing with the downtrend. So if it's gonna go down, it should be going down from these levels. Does it have to go down? No, of course not. But I think it's more than likely. Like if you look at the numbers, realistically, numbers are from Eurozone this week or today. So you have the manufacturing numbers from Germany. Okay, slightly better than expected, but 43.6 was the outcome. Now, below 50, you have a contraction in the manufacturing sector. You have in France, manufacturing sector is at 51, so it's not that bad, it's not contracting. Now, look at Euro area-wide market PMI composite. Well, that's showing that figure was 51.8. So it's like improvement, but it's not sort of great numbers. And because of trade wars, because of the outlook, it sort of looks like we'll have soft data for longer. So this, at least right now, no major reason for crude to rally. However, there has been talk amongst OPEC. I think there was a report last week or so, a news update, that they're looking to stabilize crude oil prices. We'll see if they make, if they actually make any effort to do that, because for now we still remain in a downtrend in Brent crude. Is it like an amazing setup? No, it's not. It's like any other setup. We're just dealing with a downtrend, and things are looking rather bearish, and you have a decent reward ratio. That's all we can say here. And again, as always, when it comes down to any trading, you always need to sort of make sure your risk is within sort of reasonable levels. And to give you an idea, the best traders, or professional people that want to manage, that are managing money, and I've been doing so for years, on any individual trade, they will not risk more than say 1%, 1.5%. In fact, a lot of people that I know that are managing money, like I know a gentleman, he managed about $25 million. When I said I risk about 1.5% of my capital per trade, he thought it was too high. For him, he risks 0.5% per trade. Of course, it's different. You're managing like 25 million. You make 10%. That's a 2.5 million profit, right? That's a lot of money. But that's really where the professionals are. And then you have the retail trader that would bet everything in one or two trades. And I'm talking about crude oil specifically because I am in touch with a gentleman that has been betting a lot of his money on this, and he's been short for quite some time, I think from here somewhere, and he's been going from being in a very nice profit to huge losses. And You know, when this, it's obviously nice when things go in your favor, but the feeling when you're on the wrong side of the market and it literally threatens your account, that's not a good feeling. And the problem here is that one day people get caught out. To give you another idea, I know a gentleman that's been reaching out to me, and he's short from I think 1400 in gold, and obviously the market's going against him, and he's not sure if he should just close the position, quit his account and stop trading, or if he should just keep his position. And again, you don't want to be in that situation where your account depends on one or two trades. If you lose those trades, you'll be wiped out. You do not want to be in that situation because it's not the way to trade an account. You will be caught out by the market one day if you do that, and then you'll just regret it because you just lost like half your savings, if not more. All right, so this is gold. Gold remains in an uptrend and it's rather stable. I personally think that this market could probably continue to trade slightly lower. That's what I think, at least. I would rather buy down here, but the market is disagreeing with me. They think it makes sense to be buying up here. So you have two options: waiting for that steeper pullback, or just buying at 14.96 for stops below. There's no right or wrong here. It really depends on what you think is going to happen. In my case, I just prefer having some really good, nice entries, good risk-reward ratios, and then that's, I don't try to get on board on these very short moves. And again, it has to do with the fact that I want to be here in 5 years, 10 years, 20 years, 30 years. I don't want to blow up, so I'm just trying to look for the best possible opportunities. Doesn't mean that I have losing trades though, because I still have a ton of them. But at least I'm around. Whereas, as you know, 70% of traders are not around. Okay, German DAX. So this one is interesting. It went all the way up to the sell zone, was forced down from the sell zone, went all the way up, forced down, and today was trying to challenge that August high. But we have not traded above the August high, so we pretty much remain in a downtrend. And maybe the euphoria of investors is now going to fade, and we might potentially see this market going down again. Because if you look at this from a daily chart, then there's no question about that this is a high, and below this level the market can go all the way back down. On the other hand, take out this high, which is at 11,867 or so, then the market's probably going to correct a bit higher. Who's going to win here, the bulls or the bears? I'm not really sure, but I'm leaning towards the bears a bit, because if you look at something like the S&P 500, the S&P 500 is attacking this high. This high is the August 13th high. Went up once, well, 1, 2, 3, 4 times has been rejected here. The Fed minutes are not very encouraging if you want to be a bullish trader. Today you have the market PMI figures from the US. Some people say it's going to slip below 50. The manufacturing index slipping below 50 doesn't necessarily mean too much. I think already now it's sort of showing that we have a contraction in manufacturing. Now manufacturing is not very, it's definitely big in the US, but the reason why people focus so much on manufacturing, because it's a leading indicator. So if there are tough times, you're not going to go and buy a car, right? If it's tough times, you're not going to go and buy a new fridge unless you have to, because the one you have is broken. And you're not going to buy sort of items like that in times of crisis. You'll probably just, keep your household budget. You spend the same on food and things like that. But you don't go out and start to buy big items. And that's why the manufacturing sector tends to feel the heat more. When times are really good, everybody wants a new kitchen, everybody wants a new car, everybody wants a new TV and things like that. But at time of crisis, you say, I can wait with that. And people have a pent up demand. And then obviously when things are looking good again, people start buying again. So those numbers are coming out today, and if the numbers does slip indeed below 50, that could send some warning signs to people and can get them a bit scared. So I'm thinking realistically here as well with the technicals. You just at high, you don't want to be buying at high. However, if at one point the market this afternoon the numbers are really good, that you might sort of push up a bit here, and if you have really quick fingers, you might potentially be able to scalp this difference here. If not, I think eventually, in either case, this is not a good space to buy. The good time to buy was down here, as we shared with you guys, and we're not there right now. And so I think you need to wait for that pullback. That will be sort of the most safest bet. And if you happen to be bearish, then it's obviously time to start to maybe sell a bit here, maybe sell a bit more up here, stops up here initially. And I think that's pretty much it. Let's see if you guys have any questions. So we have Ugo. How you doing, sir? I hope you're doing well. Long time no speak. So Stefan says, Alex, do you think that with most quants using return to the mean strategies and nothing really is going on in this world, despite media headlines, we can see years and years of range-bound markets? I think trading with a range-bound system and like the quants return to the mean strategies, I mean, that's definitely been the norm, right? And the central banks as well, they're trying to stabilize things, right? They don't want to see their currency gain too much or decline too much. You have even President Trump. He wants to see stock markets going up, which is good, and he helped obviously with his tax cuts in 2016 and 17 to produce really good returns for stock markets. But since then, the market is trying to catch up and see if this is sustainable. But at the same time, he tries to limit the swings in crude oil, right? He doesn't like when crude oil is too expensive. So it could be that we're heading into more range-bound markets. But I think as well, realistically, if we do have recession, which we'll have at one point, the market will not be stable. On one hand, though, like central banks, they're like a mummy now. The economy is not doing too good, and the central bank rushes out, lowers interest rates. So it's always sort of soothing the economy. And they have lowered volatility quite a lot. But I think in general, people get complacent. So what could happen is that even though it's mean reverting, so what happens when the range gets smaller and smaller? Well, to get the same amount of money as before, you need to take on bigger positions, right? So what people do is they trade with higher and higher leverage. And eventually, what happens is that, when we have a break out of the range, everybody's just like, oh, wow, I'm using like 3 more times leverage than I usually do. So that little move there, I haven't seen for like 6 months. That just wiped out like maybe 1 week, so 2 weeks, or 1 month of gains. And then everybody sort of realizes that they're too leveraged, and then they all need to buy back their position. So I think we will come back to some volatility. I think so. I don't think it's sustainable for have it like this forever. And realistically as well, central banks, they all try to obviously have stabilized economy and smoothen things out. However, historically, they don't manage to do what we call a soft landing. I think we haven't seen a soft landing yet. So I think we will have some volatility. If not, we can adapt, I can just tell you what I'm doing. So I'm not sure if it's gonna make sense. I'm just doing a little bit of studies. I don't even know exactly how I actually heard about this. But, the pitchfork I mentioned to you guys. And I show that I already have the pitchfork, actually. I have the pitchfork here. In the EURUSD, we have this pitchfork, right? So obviously, we could have drawn this pitchfork in August of last year, and then maybe, I guess by March 2019 or something, we would have seen that it actually made sense. And it seems, at least now that the pitchfork is done, I mean, it's done a very good job lately. I don't think it's gonna last forever, the pitchfork. But you have this pitchfork, and you can find similar setups in other markets. See if I can find them. Actually, it's not here. It's over here. Like you have, this is like the Aussie dollar versus the Swissy, where you can see price has been rejected by, we've been within here 1, 2, 3, 4 times. Then it's bounced off here a few times. So I guess we need to innovate. It's always about the innovation. Unfortunately, the markets, it's still a trend following system, so you try to go with the trend, but you need to innovate. My system from 2014, 15 is different to the one I'm using now, and the one I'm using now has very, very tight stop loss orders, which has not been good. So now I'm starting to maybe see if this could help, and I'm sure when volatility comes back, this is gonna be, it's not gonna work anymore. Because, for example, for something like GBPUSD, you know, you can't draw a proper pitchfork here to explain this. I guess you could, but I didn't find anything really stable. It's not like Aussie dollar Swiss C, which does this nice movement. Ronnie says, any thoughts of pound Swiss franc? And we have Nikos saying good morning to you, or hello. And Marvin as well, good morning to you, sir. Okay, so I got a question here from Marvin. What do I think? I'm gonna have two questions actually, GBP Swissy, and I also have a question about gold. So if we take a look at the first question, or the second question, because that's the easier to answer. What can drive price to 1450 in gold? So I think technically it's no secret that this is rather overbought, from a risk reward ratio perspective to begin with, because this is not an important low for most people. If you buy here today, if you're gonna put the stop at an interesting low, it would be down here. Some people probably gonna argue even down here. So it means that you have like $117 per contract stop loss. So then you need to say, okay, if I'm gonna get a 1-to-1, the market would need to rally to 1614. Is it gonna go there very easily? Probably not. So from a risk reward ratio perspective, if we go down to 1450 and we just revisit the high, you get your 1-to-1 or 1.2 actually. Then if we go up here, you get even more. So from risk reward ratio, it doesn't make too much sense. And so I think that from a technical perspective, that's so the primary reason now. And then the other thing is as well, I think that you are having a situation where people are a bit, you know, the yields in the US are still positive. Say the 10-year government bond yields is still at 1.5%. In Europe, it's a negative 64. Many other places of the world are negative. So I think you have a situation there where there's a natural demand for dollars that you're not seeing in other currencies. That could also be a driver. The other driver as well, which I think is that the Fed is not as dovish as one would have anticipated. The market itself is super dovish. But when you look at the press conferences and things like that, you don't really see that in the from the Fed, that they are as dovish as the market is. So we've got a question about pound Swissy. Okay, this is pound Swissy. Okay, this is actually an analysis. I haven't, this is interesting. This is some stuff I done long time ago. So you got a big head and shoulders with the head, right and left shoulder. You had the break here. The break here suggests that we could go down to 109.10. And then you can see here, we had that slide here. This is a small setup. It looks like that one was stopped out. So that big pattern suggests lower prices. In the short term, though, you can clearly see how we're in a correction. So how much higher are we going to trade? Well, we have a major high here at 23.76. So we can load that, and these are your fibs. We can add an moving average. Let's just load something standard like a 20-day. See what that's up to. That's your 20. You don't have to have all these moving averages, by the way. Okay, so these are your moving averages, and this is your 20, this is your 50, this is your 100, and they all sort of paint what we already know, that we're in a clear downtrend. We can also see that there's a rather big separation here in general, so this is rather oversold. I'm thinking here realistically we'll have a corrective move in, I think 120 is obviously around the corner. That would be rather easy, maybe even as high as 121. That's a 121, and then we'll see what happens, because up here you see these lows, 122, that's very strong resistance, and I think the market could really struggle to trade much higher than that. So I think as we sort of approach that, that's where the real battle is going to be, but the battle might already begin at 121. And here I think if you want to do things good, this is just one pair. You want to see what happens with GBPUSD, which we already talked about. So if GBPUSD is sort of trading up here somewhere at 123.42 or something, which is the 50-day EMA or moving average here. By the way, it's an EMA, it's not a MVA. So when this one is at a sweet level up here, like 23, 23.50, 124, where people want to sell, and dollar Swissy hopefully will be at the same level, that will give you an indication. You could also look at other markets as well. Actually, what's something that's quite interesting is that GBP Aussie, I think, is bullish. So this is GBP Aussie dollar, and it's quite interesting. If you happen to be bullish, then this is maybe what you can focus on. Actually, no, I'll take that back. There's so much resistance here, it's gonna be difficult. Let's take a look at Euro GBP. This is Euro GBP. This is some old setup we talked about. Yeah, it's a bit difficult here to say what's gonna happen, but obviously we had that where it's actually a successful breakout in Euro GBP. Then you have some other highs here. And the last really major low here is level down here. Then you have some short-term support just here. This short-term support can easily be touched and just trigger a few stop loss orders. Fibonacci from the low to the high tells you that this is the 61.8% correction level. So maybe from down here, maybe a little bit lower, I think people will start to build positions. It's gonna be interesting to see what happens with you know, that deal, that backstop, if they actually can manage to do something differently or not. Okay, I think we're gonna wrap things up, guys. I want to thank you so much for joining, and I want to see you guys here tomorrow if you can. Hopefully same time, about 9:30 a.m. London time. Don't forget to subscribe to the channel. If you subscribe, you get the notification when I'm live. Also gives you the opportunity to like that video, so please do so if you can. And as well, don't forget to share. You can click here, you can share, copy the link. That's the link to the video. If you are on Facebook, if you are on Twitter, you're on trading forums and places like that, it's very easy to share that link. As well, if you want to keep tabs on what we're up to, you have the Investing Cube Twitter, and we have the Investing Cube Telegram channel. Okay, guys, we're going to wrap things up. Thanks so much for joining me today, and I'll see you guys tomorrow for the next market update. Thank you, and bye-bye.